Oil production in the Gulf of Mexico taking a hit as Tropical Storm Barry makes its way through the region. Tropical depression causing a 73% shutdown of production there. Joining us now, Price Futures Group, Flynn. Good to see you, Phil, as always. This production can get back up pretty quickly, assuming there's not any damage.
It really can, and we're already seeing that some of the ExxonMobil and a couple of the other companies are already out there restarting production. And it's almost amazing to me when you consider the fact of what they had to do to get all these people off these platforms that are out in the Gulf of Mexico safely, get the production out of harm's way, moving things around, and immediately after the storm, almost within 24 hours to 48 hours, they'll be back to full production. It's just amazing.
Hey, good morning, Phil. It's Mitch Rochelle. Where is the sort of state of play of supply and demand of oil, not just the domestic supply that we have, but also if you look at it more globally?
You know, globally, if you listen to the International Energy Agency, they're saying that there's plenty of supply to go around. In fact, they're predicting by 2020 an international oil glut. But that prediction really comes with a really negative outlook for the global economy. You know, they're looking at some short-term data telling us that they think that demand growth is going to stop because of the U.S.-China trade war. I don't think they're taking into consideration all the stimulus we're seeing around the globe. We saw that in the Chinese economic data this morning, for example, with the GDP. Even though that was weak, we're starting to see the stimulus start to kick in with retail sales, industrial production. That's good for oil demand.
What about prices for gasoline at the pump? What do you expect to happen there? Because, again, the problem in the U.S. has been for months really getting the crude oil to the refineries and the pipeline capacity in some way, right, Phil?
It really has been. I mean, you know what, the U.S. is producing a record amount of oil, but are we doing it very efficiently? Are we able to get it to where it needs to be? We need to build more pipelines in this country, not only for oil, but for natural gas to really reflect growing demand. From this storm, you know, we've seen prices nationally go up about 4 cents a gallon since the storm began. I assume that we're going to start to give that back when the production comes back on. But keep in mind, you know, U.S. gasoline demand is stellar right now. It's near all-time highs. And that's good news because it's reflecting a very strong U.S. economy.
Phil, I know there are some new emission standards that are meant to come online. Is this going to change? I've heard some analysts say in the next 6 months the energy market is going to be very different because of these. Do you agree?
I do agree. These maritime standards for diesel fuel is really going to have a major impact. And the industry's been trying to get prepared for this for the last couple of years. It reminds me of when they initially took sulfur out of heating oil and diesel fuel. It was a process. It meant higher prices, tighter supplies. Prices will be higher because of this. The question is by how much. The refiners are doing a great job trying to keep that not too much, but I assume it's going to be at least 10 cents a gallon.
Phil, real quick, what about the East Coast impact on gasoline prices because of that refinery fire in Pennsylvania?
Yeah. Thank you, Europe. You sent us all your gasoline. Send us your barrels. Thank you. Europe saw a great opportunity here. They were sending every gallon of gasoline they could. They'd say, hey, we're not selling it over here. Send it to the U.S. And, you know, they saw that Statue of Liberty with a flag saying we need gasoline, and they sent them tankers right away.
That's called trade. That's why we like open free
it.
trade, because they're there. If they've got the excess supply, they're there when we need it. Phil, thank you so much.